I look at when I trade. Here's a company that I told you guys about in my last video, Ciena Corp. I mentioned I was going to put on a trade. I did that today. I did a bull call spread. I bought the 75, 77.5 bull call spread using December 20th expiration. Cost me 95 cents per contract. First, the reason why I did a spread trade, I've went over this a few times, but implied volatility is one of the things you got to focus on. Simply tells you that if volatility is high, options pricing is high. If volatility is low, then options are cheap. Now, if you can see on the quote panel up here where the arrow is, I got a bunch of stuff up here, but let's focus on implied volatility, which is right there, 55.4%, and historical volatility, which was 28.629%. So just on those two figures, you can tell that obviously implied volatility is high. It's almost double. That tells me that the option prices are almost double than what they have been in the past. So because of that reason, that's the reason why I do a spread. If you just buy a call option, you're paying a lot of money for something that's typically more expensive than it was in the past. So a way to get around that is to spread it. If you're buying expensive and you're selling expensive, it just takes that right out of it. So that's why I chose to do bull call spread. I bought the 75s, which were expensive. I sold the 77s and a half, which were expensive. So I'm buying expensive, selling expensive, takes it off the table. Um, my max profit is 260%. The stock just needs to be above 77 and a half in order for me to maximize that profit by expiration. I'm looking to get out of that trade by the end of the week, hopefully to make about 100% on my trade. I might not hold it, depends on how much it moves this week, but I will recap a video tomorrow or the next day just letting you know what I did. But I bought that bull call spread, cost me 95 cents. Options were expensive, so I decided to spread it. I don't usually do a tight spread like that, but um, because I'm just testing out shorter spreads a little bit closer to where it's trading. So I'm just testing out the market. So I didn't put a lot of money out there. I think I bought 10 contracts at 95 cents. You can figure out the math on that. Wasn't super expensive. But knowing that I bought 10 contracts, another thing I like to tell everybody is that when you see green, when you see some profits, take some off the table. So as a test run with a short term spread, um, I only bought 10 contracts. So if it goes up a little bit, I might sell a couple contracts. Goes up a little bit more, I might sell a few more. If you see some profits, take some off the table, lock in those profits. Um, Now, why did I chose to get in at the time earlier today? As you can see, this is a daily chart. So you can see right here in this area that you've obviously heard of support and resistance, but we had some resistance in this level. We broke through that resistance over here, and now it looks like we're just testing that resistance. Remember, once you break resistance and it tests it, it usually becomes support. Resistance turns into support once you break above that. So because we're right at that level, I chose to get into that trade because if I get a candle closed below that area, which is around 73 bucks, I'm just going to cut and run. I'll minimize my losses. But I got the potential to get a good jump from that area. It's going to test support, usually bounces back from that or bounces up from that, and I might get a quick, good little bounce and a good little profit by Friday. This is a daily chart, so you can see that here. I'm going to switch it to a 15-minute chart. So when you get your bias on a stock chart or on any type of trade you're doing, use a higher time frame like the daily chart, weekly chart. As you can see, before I switch that over, we're clearly in an uptrend. All right, higher highs, higher lows. Had some resistance over here, broke back down. Now we broke above that resistance. Now we're at support. So uptrend. That's a daily chart I'm looking at. If I were to enter the trade, when I did enter the trade earlier, I switched to a 15-minute chart. So if I switch that into a 15-minute chart right now, you'll see how the chart changes a little bit, right? So now we can kind of see where that one um, daily candle that you saw, which was resistance, you can kind of see that's all these candles here. So it gives you a better idea of where it's hovered with during the last little while, right? So around the 73 mark. So clearly we can see it broke above there now, and we're coming right back down. We're testing that level right here. I'm expecting a bounce from there, and the target was $80 by the end of December. So I'm still in a good position. I'm in a spot where if I get a close, I'm just out of that trade, and I'm just going to look for a better trade other than that. So looking to get to 80, looking for 100% profit by the end of the week. If I get above 77.5 by the end of the week, I'm going to hold that trade, and I'm going to try to maximize my profit or squeeze a little bit more out of that early next week. But I'll make another video on this trade so you guys can follow along. Probably not tomorrow, but probably the day after tomorrow. So we'll see if I get out of that trade tomorrow, because we're right at the level where it's testing support now. So if it closes below that, I'm out. If I do get out, I'll make a video tomorrow, let you guys know. If you guys want to jump in on this trade, I will post right away. Sorry, that's my dog. There you go. Someone's probably at the door. All right, that's it. I'll recap. Thanks, guys. Peace. Have a plan. Trade that plan. Look to fight another day.